Well, as Mongolia's resources sector starts to come online, there are some who believe it will pose a serious threat to Australia's mining boom. And that comes as many analysts predict that the country's resources boom is naturally starting to wane. To look more closely at Mongolia's economy and mining sector, I spoke earlier to Travis Hamilton, Managing Director with Khan Asset Management. Travis Hamilton, welcome to the program.
Whitney, thank you very much for having me.
So can you just tell us what's the general outlook for Mongolia's economy for 2013?
Extraordinarily bright. The Economist unit has actually forecast that Mongolia once again will be the second fastest growing economy in the world in 2013. Their prediction is for 13.5% real GDP growth, coupled with very low double-digit inflation, will put nominal GDP growth in the mid-20%. Our own forecasts internally, though, expect that real GDP growth is likely to touch 20% this year.
Now, of course, most of that growth will come from the mining and resources sector. Do you think that there's enough government policies in place to take advantage of that growth potential?
Look, the growth in Mongolia at the moment is being driven by investment into the mining sector. None of the very large mining projects are currently in production or anywhere near peak production. So the growth at the moment is being driven by that investment. It is certainly a changing capital market, there's lots of changes to legislation at the moment. And the government, I think it's important to point out, Mongolia is a functioning, albeit fledgling democracy, and it is going through a number of legislative changes at the moment, all of which is aimed to try and find a balance between the country's dependence upon foreign investment and foreign expertise with local interests.
Well, that brings me to my next point. As you say, it's a fledgling democracy. So are there any sticking points or geopolitical issues that come into play in terms of, attracting foreign investment, or that could potentially be a deterrent to that?
It's a little difficult to answer that question. Mongolia is a very attractive economy to invest in. It has an absolutely massive resource endowment on the doorstep of China. Until May of last year, there were no restrictions whatsoever to foreign investment into the country, and it was a very liberal mining law. At the moment, there has been changes to foreign investment legislation. Those changes were perhaps a little dramatic. That was passed in May of last year. Both the President and the Prime Minister have both stated publicly that foreign investment law is currently under review and is slated to be changed in the course of the next couple of months. There is a new draft mining law which is currently under review. It has received some wide criticism from global miners, but I like to highlight to all interested parties that this is simply a first draft, and it will undoubtedly go through quite a number of changes, again to try and balance interests or local interests with the country's dependence upon foreign investment. Because for the time being, the government doesn't actually generate very much tax revenue whatsoever. And it will only be when these large mining projects actually kick into production that the government will start to receive huge amounts of free cash flow.
And where's most of the foreign investment inflows coming from, Travis Hamilton? Is it China, or what countries are you seeing that from?
Well, Rio Tinto and its subsidiary Turquoise Hill have invested close to $7 billion already in the Oyu Tolgoi project. That's the world's largest underdeveloped gold and copper mine, which is likely to go into commercial production within the next several weeks. That mine alone will produce 1.2 billion pounds of copper this year, as well as 650,000 ounces of gold. When it goes into production, its contribution to GDP will be approximately 1/3 of the country's gross domestic product. Beyond that, we're seeing very large mining organizations from the US, other Australian miners, whether that be Peabody or others, all entering the mining space in Mongolia. They have some of the world's largest coal deposits, some of the world's largest iron ore deposits, and as previously mentioned, they're right next door to the world's largest commodity consumer.
Now, as you mentioned, Oyu Tolgoi is due to come online in about 6 weeks' time. How long then until those sort of benefits trickle through to the Mongolian economy?
I think that's something we're likely to see throughout the course of 2013 or certainly early next year. The oil tallgoy already paid $280 million in tax last year, pre-production. Once they are producing, additional tax revenues will be generated by the government. A lot of Mongolians have expressed some discontent that the average Mongolian is not yet feeling the benefits of this boom. And what the government has not been successful in explaining to local Mongolians yet is that the government is not yet receiving the benefits from this. And only when these mines are in production will the government be generating revenues, and then will those benefits start to trickle through to local Mongolians.
Do you think that Mongolia's mining and resources sector has the potential to pose a real threat to other countries' mining and resources sectors such as Australia?
Undoubtedly. Mongolia's growing resource exports will unquestionably pose a serious threat to the Australian mining industry. And the fact is that Mongolia can deliver comparable resources at vastly cheaper acquisition costs and, of course, vastly cheaper transportation costs. We are aware of iron ore mines in Mongolia that are presently delivering iron ore to the Chinese border for less than $40 a tonne. I've heard reports that some of the miners in the Pilbara, it's costing them up to $90 a tonne simply to get their iron ore to Port Hedland. So as infrastructure comes online in Mongolia and as more mines complete the development phase and start producing, we're going to see a dramatic increase in exports. And that dramatic increase in exports will not be driven by Chinese growth. It's a China supply story, as China will continue to switch their supply contracts from the more expensive seaborne resource exporters such as Australia, as well as Indonesia and India, to its cheaper neighbour, Mongolia.
Travis Hamilton, thanks for joining us.
Whitney, thank you very much for having me.